while being slightly fast-paced. The market for Open Door Technologies Inc., ticker symbol OPEN, is currently closed. As of the market close on Friday, September 19, 2025, the stock stood at $9.57, marking a significant intraday downturn of 3.72%. This recent price action might seem disheartening for many holding onto their shares, especially when viewed in isolation. However, to truly understand the trajectory of this stock, we need to pull back the curtain on the superficial daily movements and delve into the underlying mechanics of its market performance, a reality that often diverges sharply from the prevailing narratives. The expectation from a disruptive force in the real estate sector is a smooth upward climb, but the reality for Open Door has been a turbulent journey, a battle between its ambitious vision and the harsh realities of the housing market. The general belief surrounding Open Door is that it is a high-growth technology company poised to revolutionize the residential real estate industry through its iBuying model. This narrative paints a picture of a future where buying and selling homes is as simple as any other e-commerce transaction. While this vision is compelling and certainly a driving force behind the stock's more bullish moments, the deeper reality is far more nuanced and, frankly, more precarious. The company's stock performance is not just a reflection of its technological prowess or market penetration. It is intricately tied to the cyclical and often unpredictable nature of the housing market, interest rate fluctuations, and the significant capital required to sustain its operations. Many investors, particularly those drawn in by the allure of a disruptive tech play, may be underestimating the inherent risks associated with a business model that is, at its core, a sophisticated form of house flipping. This is where a more thorough analysis, moving beyond the headlines and into the granular details of trading volumes, institutional sentiment, and macroeconomic pressures, becomes paramount for any serious investor considering Open Door stock for their individual brokerage account, perhaps through platforms like Fidelity, Robinhood, SoFi Invest, or Interactive Brokers. Looking at the recent stock movement, the daily swings in Open Door's share price have been nothing short of dramatic. The past few weeks have seen the stock touch a 52-week high, a testament to the market's capacity for optimism, yet also exhibit sharp pullbacks as seen in the latest trading session. This volatility is not arbitrary. It's a direct reflection of the market's ongoing struggle to price in the complex interplay of positive and negative catalysts. Trading volumes have also been a key indicator of the heightened interest and speculation surrounding the stock. On days with significant news, whether company-specific announcements or broader economic data releases, we've witnessed trading volumes far exceeding the daily average, indicating that both institutional and retail investors are actively repositioning their stakes. This is not a stock for the faint of heart. It's a battleground for bulls and bears, with each side armed with a compelling yet contradictory set of arguments. For those engaged in online investing, the constant stream of information and the rapid price fluctuations can be both an opportunity and a significant risk, making a well-thought-out investment strategy, perhaps with the help of online investment tools or even Schwab Intelligent Portfolios, all the more crucial. Institutional activity provides another layer of insight into the expectation versus reality dynamic of Open Door stock. While a significant portion of the company's shares is held by large institutions, a closer look at the recent filings reveals a mixed bag of activity. Some prominent funds have been increasing their positions, signaling a long-term belief in the company's disruptive potential. However, others have been trimming their holdings, suggesting a more cautious stance, likely driven by concerns over the company's profitability and the challenging macroeconomic environment. The presence of significant short interest also cannot be ignored. A high level of short selling indicates that a substantial portion of the market is betting against the stock, creating a tinderbox for potential short squeezes, but also highlighting the very real concerns that are fueling this bearish sentiment. For anyone considering self-investing, understanding the flow of institutional money and the sentiment it represents is a critical piece of the puzzle. It's not just about the technology, it's about how the smart money is positioning itself and why. The differing opinions among major financial players should be a clear signal to individual investors that a deep dive into the company's fundamentals and the broader market landscape is non-negotiable before making any investment decisions through Fidelity Investments, which offer a range of Fidelity ETFs and Fidelity mutual funds, or the more streamlined Robinhood app, known for its Robinhood stock trading and Robinhood fractional shares. To understand the future, we must first grasp the present and the past. Opendoor Technologies, Inc. operates as a digital platform for residential real estate transactions in the United States. The company's core business, its iBuying service, allows homeowners to sell their properties directly to Opendoor for cash, bypassing the traditional, often lengthy process of listing with an agent. Opendoor then makes necessary repairs and renovations before reselling the homes on the open market. The business model is predicated on the ability to accurately price homes using sophisticated algorithms, execute renovations efficiently and cost-effectively, and sell the properties at a profit. While the company's revenue figures can be impressive, reflecting the high value of the assets it transacts, the profit margins are notoriously thin. This is a capital-intensive business that requires a significant amount of cash to purchase and hold a large inventory of homes. Past financial reports have shown periods of rapid revenue growth, but also substantial net losses. The path to sustained profitability has been elusive, and this remains a central concern for many investors and a key reason for the stock's volatility. For those exploring investment sites, the allure of a company disrupting a massive industry like real estate is undeniable, but the financial realities of that disruption must be carefully scrutinized. SoFi, with its SoFi Invest platform offering SoFi stocks and SoFi ETFs, provides another avenue for investors to access such opportunities, but the need for due diligence remains constant, whether one opts for a SoFi robo-advisor or a more hands-on SoFi active investing approach. Looking ahead, the future outlook for Opendoor Technologies, Inc. is a study in contrasts, a landscape of significant opportunities intertwined with formidable risks. On the one hand, the potential for growth is immense. The residential real estate market is one of the largest asset classes in the world, and the process of buying and selling homes is ripe for technological disruption. If Opendoor can continue to refine its pricing models, improve its operational efficiency, and expand its market share, the upside could be substantial. The company is also expanding its service offerings to include mortgage, title, and escrow services, creating a more integrated and potentially more profitable ecosystem. These ancillary services could provide a much-needed boost to the company's bottom line and reduce its reliance on the historically low-margin business of iBuying. However, the risks are equally significant. The housing market is notoriously cyclical, and a downturn could have a severe impact on Opendoor's business. Rising interest rates, which we've seen in the recent economic climate, make home ownership less affordable, reducing buyer demand and potentially leading to a decline in home prices. This would not only slow down Opendoor's transaction volume, but also increase the risk of losses on its existing inventory of homes. Competition is another major factor to consider. While Opendoor was a pioneer in the iBuying space, it now faces competition from other well-funded companies, as well as from traditional real estate brokerages that are increasingly adopting technology to streamline their own operations. The company's ability to maintain a competitive edge will be crucial for its long-term success. Furthermore, the regulatory landscape for iBuyers is still evolving, and any new regulations could impact the company's business practices and profitability. For investors utilizing platforms like Interactive Brokers, known for its advanced Interactive Brokers trading platform and competitive Interactive Brokers fees, a thorough analysis of these market-wide risks is just as important as understanding the company's specific financial health. Before opening an Interactive Brokers account for Interactive Brokers stock trading, one must weigh these potential headwinds against the company's growth prospects. Do you think the housing market will stabilize in the coming year, or are we in for a prolonged period of uncertainty? Comment below with your thoughts on the future of real estate. In summary, the story of Open Door Technologies Inc. is a classic tale of expectation versus reality in the world of stock market investing. The expectation is that of a technology-driven disruptor on a clear path to dominating the real estate industry. The reality is a far more complex picture of a company with a promising yet unproven business model operating in a challenging and cyclical market. The stock's recent performance, with its dramatic swings and high trading volumes, is a clear reflection of this ongoing tension. While the potential for long-term growth is certainly there, the risks are undeniable and should not be underestimated. For any investor, whether a seasoned professional or someone just starting their journey with online investing, a sober assessment of both the bull and bear case is essential. The allure of a stock that has seen such explosive growth can be powerful, but a disciplined approach, grounded in a thorough understanding of the company's fundamentals,